Today we will talk about one of the most, or maybe even the most important concept there is when it comes to building and trading profitable trading strategies, and we refer to this as confluence. And confluence is really the king of trading strategies, and I will show you exactly step by step how to create a profitable strategy. And confluence basically means that we're using different tools, different concepts of technical analysis, price action, and we want to stack different signals on top of each other. And instead of trading a one-dimensional trading strategy, we have then a multifaceted trading strategy where we have different tools and concepts, different time frames that really work well together and that help us find the trades in the perfect context. So let's get started and let's see how to build a trading strategy step by step. We are starting with the time frame, and by the way, I see so many people always ask about what time frame are you on, what time frame are you using, and you can always see it here in the top left. So you can see 1 day stands for daily chart and a daily time frame. And what we have here on the higher time frame is we have two signals already. First is the pin bar right here. Second is the trend context. We are in a mature trending phase. The big problem that many traders have is that they don't use confluence, and then as soon as they see a pin bar, they will then jump on a trade and go short. This is obviously very wrong because a pin bar alone is a very weak signal and it's never recommended to just trade based on one confluence. But as you will see, we can build a very, very nice story behind what is happening. So on the higher time frame, we have a pin bar, which is a rejection signal, and we are also having a mature trend. And especially in Forex is generally considered a mean reverting market, which means that the trends don't last for a very long time. And the longer a trend goes on, the higher the likelihood that the trend will reverse at some point. So let's keep going. We are still on the higher time frame, and we have signal number 3, which is a trend line. So now we have also location confluence. We don't only have price action and trend confluence, but also location confluence, and the trend line has in the past caused a very strong reaction. We have signal number 4 on the higher time frame still. It is the round number. We are here at 137,000. Round numbers are very important. They are used by a lot of traders, by algorithmic trading strategies. And here is an example of an order book. And you can see wherever we have those red big clusters, those are the round numbers. 114, 115, 113, 110, 108. You can see very often those clusters around numbers are very obvious. So it makes sense to see a rejection here as well. We are still on the higher time frame, and we have our last confluence on the higher time frame, which is a fulfilled ATR. So what the ATR can tell you is how much has the price moved during the last week. For example, maybe the price has moved on average week after week in the past, maybe 100 pips or maybe 200 pips, whatever it may be. And then you can see, has the price this week already moved 100 pips? If the answer is yes, and the price has already moved 100 pips, then it is not likely that the price will keep going. It is more likely that either the trend will end or maybe even completely reverse, because this is what the price did in the past. And this is what it has done already this week. So we have this, you can see this is an exhaustion zone indicator, which is from Pattern Alpha, link in the video description. And it shows us that the market dipped into the ATR zone. So now we can go to the lower time frame, and we have identified on the higher time frame a lot of confluence factors, and we know that there's a good chance that the market has made a good bullish run, and maybe it's time on the lower time frame to look for a short. And we're going to continue to build our trading plans and to stack confluence. So we are now on the 1 hour time frame, and we're going to continue our quest for building and stacking confluence. So what we see here is a potential pattern. We have a double resistance level, we have a support level, we have a double top, and we have lower highs as well. And one thing we don't have yet is the pivot point on our side. This is the central weekly pivot point, and we are trading above it. If the market is above a weekly central pivot point, it generally shows that we are in a bullish trend. If we want to go short, we should generally wait to be below the central weekly pivot point. So this is a negative confluence, and we need to wait for this to occur. We can, in the meantime, keep building our story and our confluence. For example, we can add the RSI, and we see we have a divergence, which is another signal that the bulls are leaving and the bearish side is maybe gaining momentum. We can now also see we have a much broader pattern. We have a support and a double support. We continue to make lower highs, and it seems like the market is breaking out of the pattern. Now what we want to do is a trading plan, or find a trading plan that allows us to enter on a retest. Initial breakouts are usually low probability. So when you see that the market is turning over and it is making its first breakout trend wave, usually it's better to wait for the second or the third trend wave. So we have trend wave 1, which is the breakout trend wave. Now we can wait for trend wave 2 to establish, which is the retest wave. And then we can join and trade wave 3, which is generally considered the highest probability trend wave. You can also see the price is now much, much closer to the central weekly pivot point. We just got a new central weekly pivot point. We are still trading above it, but at least the price is much closer. Now we can start building a continuation pattern. So now we are seeing the beginnings of a flag pattern, which is one of the highest probability continuation patterns that there is in trading. For a flag pattern, what you generally look for is a trend line against the overall trend direction. So you can very nicely see how the flag is starting to show here. And then later we can build a trading plan, which generally would consist of the price breaking out of the pattern and probably also getting below the pivot. And this is actually what happened here. Just a few candles afterwards, you can see we are suddenly seeing the flag continuation. We're getting the breakout out of the flag, and we also have a breakout below the pivot point. So now you can see we have signal 11 and signal 12 on our side. We are leaving the flag, and we are also on the right side of the pivot. So what are we going to do now with this? And you can see it looks already much, much nicer when we zoom out a little bit. We're coming from this uptrend. We have the divergence. We have lower highs. We have the breakout. We're trading below the moving average. We had our first pullback in the new downtrend. Wave 2 completed here. And we are potentially very early in wave 3, which is then our continuation wave that we want to trade and go short. So what we do now is we wait for a retest within a retest. So remember, this is our first breakout area. And now we have our first retest here. And now we have our second retest here. So we have a breakout out of the flag. And then we have a retest here of the previous lows and also a retest of the weekly pivot point. So now you have your potential entry here. The potential entry is existing once you leave here the sideways phase. It's very common to see after a breakout that the market not immediately takes off, but there's another retest, especially if there's such an important and high confluence structure such as the weekly pivot point, the flag pattern, a previous low, and also the 50-period moving average. So this could be your potential entry point here. It's a very, very high confluence area. You can see we're at signal 14 after we started building our confluence from the higher time frame to the lower time frame. And this is what happens afterwards. This could have been your entry. You can see there's even another retest afterwards, and the price is now on its way to start a new downtrend. So there are a few takeaway points here for you to consider. First of all, it's very important to stack confluence. A lot of traders make the mistake that they only trade one-dimensional trading systems, so they only look for a pin bar, and as soon as they see it, they jump in the market. But this is not robust enough. You need to have a strategy where you can really have a story behind your trades. You also want to make sure that you use complementary tools. You don't want to use tools or indicators that give you the same information. For example, you don't want to use the RSI and at the same time a MACD, because they are both momentum indicators. They will show you the same thing and the same information at the same time. So it's not recommended to use that. Use complementary tools that just help you find different confluence factors that really fit nicely together. Map out trading plans. Know in advance where you want to enter, what has to happen before you get into a trade, and that will help you to stay more objective and also avoid some of the emotional trading problems. And then you can create a repeatable trading strategy. You want to eliminate as much noise as you can from your strategy and from your trading in general. So having this confluence approach where you know exactly what are the confluence factors that you're looking for, what is the type of entry that you're looking for, and then you can repeat it over and over and over again, and you can take the same or at least very similar trades many, many times, and that will help you eliminate a lot of noise from your strategy, from your results, so that you can over time fine-tune it, tweak it, analyze it, and keep developing your strategies.